Hey there, welcome to the channel. So today we want to take a look at the cross currents in the market between the stock market going up, and inflation and commodities. So if we look kind of today, we can see that the SPY went up a little bit today. But what's interesting as well is with these guys is you see these little W's forming. So we see this W forming here. And we see this in a lot of places right now. So it's sort of setting up to maybe the market going up a little more. You see the W here on the Qs, IWM, similar kind of move that we see. And then even things like RK that has been bludgeoned, has a significant little move here. In that, what this thing has done is it's broken out above the resistance at 46. So volume's not great, but it did break out above that. So interesting to see if we're going to have a move up in the market right now. So this is in the short term for sure right now. But one of the things going on is it may in fact be, a little bit of a response to decline in things like oil. So if we go look at our oil today, we can see that oil has declined significantly this week. So if we look at USO, it had this big decline yesterday, and then today it's up, but still it had that big decline. And if we look at the thing like Brent, we can see that, we had a big decline yesterday and then up 4% today. So that kind of decline in oil, maybe that gave a little boost to the market today. What's interesting is the 10-year is still kind of what we have here is that it's almost like a speculative head and shoulders forming, because you see here he came down and made this guy. Now, the question is, what are we going to see? It's starting to bounce off this 27 area. We'll see. Will it go up much more? And how far will it go? I mean, is it going to just keep going like this and keep the trend, or is it going to break down? That'll be interesting to see. But it could mean that rates could be going somewhat lower in the future. See, like CRISPR, you see some of these stocks like this kind of broke out above recent resistance. So that was positive. And then Tesla didn't quite break out, but the RK did. And then we have things like, what's interesting here is UNG. See, UNG getting killed too. The last month it got killed, but then today we had a huge up day. So that's kind of interesting. So one of the things that's happening is if we look at the bigger picture, we can see that commodities have in the last 2 months been getting killed, copper in particular. So what does that mean? That kind of presages something. It presages like commodities going down, your oil, your copper. This presages that maybe we're going into recession, right? Because if you go into recession, demand for oil, copper, all that stuff is going to drop, and therefore the price is going to drop. So the market is sniffing that out. So we've had this very big bull market for many, many years. And then finally in 2022, it started coming down as the inflation was persistent and the Fed raising rates. So you have this push and pull and this cross current. The cross current is that the Fed is raising rates, which generally would make the stock market go down. It would also generally, it's kind of putting us into recession. So at the same time that all that's happening, we still have persistently high inflation. And with that, we still have persistently high commodity costs. But the commodities are starting to go down recently in the short term. And so the commodities are kind of pointing us to and smelling out that, it looks like we're in inflation. You can see that, if you just look at this stuff, it kind of points to like things like week 2 just crashing, and even UNG crashing, even though it's had a recently decent day today. So you can see that that's pointing towards a recession. So now the cross currents are, when does a recession come? When does the Fed pivot? So now inflation is still high. So it sounds like the Fed wants to keep pushing rates up, and that should cause the market to go down. However, the commodities are coming off. So the commodities coming off, when you see oil drop like this, then that kind of pushes some interest into coming into the market. So everyone's jumping the gun. Everything's jumping the gun. You have the commodity traders like, oh, we're already in recession, sell, sell, sell. So they're doing that. And then that's kind of sending the signal to the stock traders that, hey, the inflation is going to come off because oil is going down, copper is going down, all these commodities are going down. So inflation is going to come off. So the Fed's going to back off. And so rally, rally, rally. So you see all these little kind of moves that are going on in this market. And that's kind of the cross current. And that's, of course, where we have to be careful because these short-term moves don't add up to big moves. So one of the things we could do, and I was thinking about, is this a new kind of commodity super cycle? I know some people are talking about this. If I look here and we see that in 2020, we had oil, it got as low as 20 on West Texas Intermediate, and it got as high as 130. So we've had this huge run over the last couple of years. So this causes a variety of issues. This is like high inflation, et cetera, et cetera. But the question is, now we're seeing it pull off. We're seeing the Fed raise rates to increase. We probably are in recession. So oil will come off. If we're in recession, oil will come off. However, we have this counter move that's going on. We have this continued move to like green energy. That's not really a move to green energy. It's just outsourcing energy production to other countries that we don't like. And now all of a sudden with the Russian-Ukraine thing, we're like, okay, this doesn't look so good. So now people are backing up. Europe is in particularly tough shape. They're in bad shape because they rely on Russia for like all their natural gas, and that's their economies. The natural gas is their economy. They can't just shut it off. They can't just stop using it, no matter what they want to do. The real solution is they had to do something with nuclear, preferably new nuclear, molten salt reactors, something that's much safer than the current crap, but that's not what they've done. And so it's a huge problem. So you could see like a depression in Europe, and that would certainly affect us as well and cause a recession here, and it would make it steeper. So what we see right now, so let's go look at the past. So in the past, look at this time over here is 07, 08, 09. So what happened here is this was the GFC. So what happened along with oil spiking up, see, it's interesting, oil was spiking up here, but also we had the housing bubble and all that stuff go on. And then it all imploded. And then because we went into recession and everything imploded, of course, oil imploded as well. Housing, all that stuff, it impacted oil. Forget it. Boom, came down. But the thing I note here is that we were kind of already in a bull cycle. If you had a low here in 99 and before the worst of that started in 07, you already had 7 years of like oil going up. And then even though you had this big interruption, it basically returned on the outside of it. It returned to remain persistently high, pushing anywhere from, 90 to 110 a barrel on West Texas. It wasn't until about 2014 that it finally broke lower, et cetera. So that's what I'm wondering. So now my speculation is that, look, the Fed's raising rates, the high inflation, both of those things together are causing an effect that's going to lower commodity prices. It's going to cause a recession that'll lower the inflation finally. But on the backside of that, so we're talking like next year when we start coming out, the question is, how low is this oil going to go when we don't have the investment in the oil? If you look at things like how much oil is being produced, where it's being produced, you can't cut Russia out of the oil. You can't cut them out of natural gas. You just don't have enough everywhere else, and you can't make up for it in a short amount of time. Any plan, any strategy you'd want to use to replace it takes 10 years plus. Even in the US with our fracking and stuff, if you want to go ahead and get that production back up, you would have to do lots and lots of investments. You'd have to drill lots more wells. And the problem is we have this kind of fracking, shale oil kind of stuff. And it's very, the wells usually are like, a lot of these are their fracked wells, and they don't last very long. And I had some experience with this, and, you come in, you spend all this money, you drill the well, and it's like, boom. And it's like, wow, it's coming in at 4,000 MCF a day. You're like, wow, this is awesome. It's going to pay off a lot sooner. And then all of a sudden something breaks or something doesn't happen. And it's like, where's the well? It's gone. But even if your well holds up, it's like, it drops off rapidly. You might be like 4,000, 5,000, 6,000 MCF a day. And after the first year, you might drop off to less than half of that. and then it quickly drops off from there. So the point is, it's a never-ending stream. Like that's the problem with our shale oil stuff, is that you have to keep drilling, and keep drilling new wells to replace them, because they just don't last that long. So that's what my concern is, and that's what I wonder if what's happening here. So thinking about it is like, okay, is oil going to go to zero? No, but is it going to go a lot lower? Certainly. I think if we're in recession and that continues to go, it's going to go a lot lower. It's just all about, when does the Fed pivot? If that inflation, like, remember in our data that we saw on that inflation, we did see core actually kind of come down a little bit, slightly. So the core had actually possibly inflected on the last data that we had. So I'm kind of thinking that, we're kind of getting there. We're kind of getting to that point where the Fed will pivot at some point, but they probably go at least two or three more rate cycle hikes, not unless something breaks really fast. And so you'd say, well, gee, the market's down 20%, 30%. Isn't that breaking? Well, no. For them, no. They don't care, because it's been orderly. So they really don't care. This has been an orderly decline. And, if you look a couple of years ago, 2-3 years ago, you were at half your current level. So it's like, okay, whatever. No one cares. They don't care. So I think that's it for this one. And that's kind of the thing that we're watching out, right? It's not going to be, there isn't like one answer. So like I'm saying that, like, I don't have the answer, but even if someone thinks they have the answer, there's at least two answers, and we're bouncing between them. We got a ball bouncing around here. We're bouncing around between high inflation, commodity prices, recession, when the recession occurs, when the recession starts coming out and demand starts picking up. Demand hasn't even dropped off that much at this point. It's just like, when is all this going to happen? All these things are going to happen. Everything happens, just not at the same time. And figuring that out is the hard part. All right, that's it for this one. Bye.